Hey everybody, I am here with Jamin Cousins from Axia Home Loans. Jamin is an awesome loan officer, one of our favorite at Anderson Realty. I'm actually up at my cabin today and had a Zoom scheduled to chat with Jamin and thought it'd be fun to record a little something and talk about financing for second homes and kind of cabin properties. Um, Jamin, I have a couple questions for you.
Yes,
Hang on, I'm
sir.
gonna get my ears up here. So yeah, I've helped a number of people in the last few years purchase second homes, lake homes, recreational properties. I know that you are currently building your own dream cabin. I'd like to hear a little bit about that. But
Yeah.
if folks are thinking about buying a lake home or a second home or a cabin, what should they know
Yeah.
as far as the financing process goes?
Yeah, totally. So I guess we could start by talking about, there's three occupancy types that you can use to finance a home. There's primary residence, there's investment property, and there's second home. Those are kind of the three buckets that the property has to fit into from a financing perspective. And so we'll be talking mostly today, I think, about the second home loan. A lot of people think you got to do 20% down if you're buying a second home. That's not the case. The minimum down payment on a second home loan is only 10%. And we're going to talk a little bit about this later, I think. But the cool thing about that too is, you can use that property for short-term rental. And it's a good way to kind of get into that space with less than 20% down. So that's kind of the main loan product I think we'll focus on is kind of the second home loan.
So 10% down if it's your second home. And
Correct.
I'm assuming the same kind of rules apply as far as debt to income ratio, credit score. What other things is the lending more stringent when it's a second home? Do the same credit scores and debt to income ratios apply, or what would the
Yeah.
numbers we're trying to hit be?
Yeah, that's a great question. Yep, it's a lot of the same qualifying kind of guidelines as any other purchase. So credit scores are considered, debt to income ratios considered. I don't want to say you got to have a certain minimum credit score or a certain maximum debt to income ratio because all of that is a little bit fluid. The way that works is that Fannie Mae or Freddie Mac sort of evaluate the whole picture of what's going on when it comes to the combination of credit score, down payment size, debt to income ratio, reserves, money you have in the bank after the cash to close. They sort of evaluate the total picture and determine what's possible given all those factors intertwined. The second home occupancy status is a little bit of a gray area in lending. It's probably the most gray between the three I mentioned, because to finance a property as a second home, it's really got to look like a second home. It's got to look like a vacation property, be on a lake or be more than, 30 minutes from your primary residence. I live in Burnsville. It'd be pretty tough for me to buy a second home in Bloomington or
Yeah,
Minneapolis.
sure.
It's probably
Okay.
not gonna work.
Because they know you're just doing it as an investment property and not wanting to put the 25% down. And
Yeah. Yeah.
yeah, yeah, I get that. So yeah, a lot of people, it seems most people that I've helped purchase lake homes and recreational properties have the idea that they're going to buy it and not be there every weekend. So opening it up to people to use through Airbnb or VRBO. And of course, thinking that that will offset income or offset the expenses rather and gain some income.
Mhm.
Do lenders consider this as income?
Yeah, great question. Yes and no. We can consider it as income if there's been a history. And so that's another key thing with qualifying for a second home loan is you typically can't use rental income from the subject property to qualify. If you need rental income from the subject property in order to qualify for it, then it's got to get into the investment property
Yeah.
occupancy status. Now, if you buy property as a second home, so again, you have to qualify for the full payment in addition to your primary residence payment, which for a lot of people that is doable. Not everybody, but for a lot of people it is. And I have a lot of clients that kind of disqualify themselves sometimes and say, "Oh, I don't think I can qualify for that." Well, let's take a look. You might be able to, and I think oftentimes people are able to qualify for more than they think they can.
I've seen that.
So if you buy a second home with 10% down and then you do rent it out on Airbnb, try and offset the cost and everything. If there's been a year history of that, then you can use that income for future approvals, maybe cash out refis, future purchases. So
So
as long as
after a
there's
year, To
after a year.
refinance. Okay. Otherwise, at the time of purchase, you'd have to be into the investment category and put 25% down versus 10. Is that correct?
In the investment property category for a single family home, the minimum down payment is only 15%.
So you're only bumping it up 5% if, say like somebody wants to buy some awesome Airbnb that does get $50,000 a year in income. I know of a few out there that do this.
Yeah.
That could actually kind of move the dial then and make that be a realistic gain, I guess, in switching to an investment versus conventional.
Yeah.
Cool. All right. So conventional second home, 10% down.
Yeah.
Single family is only going to 15% down as an investment. I like
Correct.
that.
Yeah. I think it's important to know too, with investment family 15% down, you are paying mortgage insurance. It's a little bit higher as an investment property. The mortgage insurance is, and most people don't know this, if you're paying mortgage insurance on an investment property 15% down, that does not drop at 20% equity. That waits until 30% equity on a single family investment property.
What about second home?
Yeah, with a second home, you are paying mortgage insurance if you do 10% down, and that does drop at 20% equity.
Interesting. Okay.
Yeah.
So what I'm getting is we need a good financial advisor if we're going to be buying a lake place or a cabin. Get a good realtor, get a good loan officer, and come up with a good plan.
Yeah, I will say too, Mike, I think, I think it's really important because we had to wrestle with this personally as we're building our North Shore place, which we can talk more about if you want, but we had to wrestle with, as we're looking at this place, is it going to be primarily an investment or primarily personal use? I think that's a really important question to answer as people are thinking this through, because if it's primarily personal use, then you're looking for a property that you love, that you're primarily going to enjoy personally, and that's sort of your main criteria. If it's primarily an investment, really changes the decisions you make on the property. You're looking more at the numbers than you are the aesthetics, So I think that's an important question to ask yourself and get an answer to out of the gate.
Yeah, cool. Tell us about your place up north.
Yeah, so we actually got a couple pictures in my office here, paintings of right by our property up there. So it's a really special place. My parents went up the North Shore for the last 40 years, really. They gave us a love for the North Shore of Minnesota, and we're now giving that to our kids. We love going up there, all the hiking, all the outdoor stuff. So this is really a multi-generational dream come true for our family to have a place up there. There's a lot I could talk about, but we were back and forth on it. It's a stretch for us financially. And I think that's important for people to know that are watching this too, that if this is something that you feel like is a real fit for your family, your future, it may feel a little bit uncomfortable in the beginning. And I think that's okay. It certainly does for us. We're feeling a little bit stretched, but I think that for us, it's really an investment into our family values, into our family's legacy. And so I think that's really exciting for us.
I've experienced that myself when we bought our place several years ago. I was like, I hope I can do this.
Yeah.
I've seen, of course, the value really grow, and we've been grown to be comfortable with, the expense of owning a second place, but it's definitely has turned out to be not only an amazing place for my family to come and kind of fill our souls, but it has been a really good investment. And I think we're going to see that for years to come as climate migration continues to be a thing. People are moving to the metropolitan area, the Twin Cities, and buying second properties. And people are moving out of the Twin Cities into their lake homes. And we're just really seeing values of these types of properties going up.
Yeah,
Okay.
I agree. I think I saw a stat this week, I think, that said rates that were locked for second home purchases jumped by like 170% in 2020 or in 2021, I think.
Yeah.
Which is crazy. I mean, to me, that is a signal of, high income earners having more income. We've just seen the wealth disparity kind of increase, unfortunately, this year, but also people wanting to have a bug out place, after COVID and everything that's gone on. So interesting that we're seeing. For sure.
One more question, I think, just simple, like, what are the rates like for second homes versus primary residence? Do you pay more for your mortgage on your second home?
Yeah, it's a great question. And that's something that's actually a very timely question, because There were some Fannie and Freddie changes earlier this year that imposed higher pricing on second homes and investment properties than were on primary residences. That has since gone away. We all were partying in the lending industry when that went away because it just didn't make much sense from a consumer perspective. So at this point, rates and terms on second home loans are pretty much on point with primary residences, which is really great.
Yeah, good. Cool. Well, this has been great. I really appreciate it. Hopefully some folks out there, whoever's going to see this, wherever they're going to see it, might learn a little bit of something and be encouraged and take this step to doing this if it's right for them and their families. But I really appreciate it. Thanks a lot.
Thanks, Mike. Great to chat with you.